What's up traders, it's Daniele from Trader Dynamics. In this video I'll explain the difference between an inventory heat map and an order flow footprint chart. And although those two concepts are very much related to each other, they reveal very different information. And even some of our students mix up the wordings, which drives me I'm kidding, of course, but if you finally want to know the difference between those two concepts, then this little video is right for you. So the inventory heat map, or also called order heat map or DOM heat map, is, as the name suggests, a graphical illustration of the DOM filtered by large orders. Now I won't explain in this video what the DOM itself is, since there's already plenty of other resources out there, and we at Trader Dynamics especially go into all the nuances and everything you need to know about that topic in our education program. But in a nutshell, it's the resting inventory or limit orders sitting on the price ladder and waiting to buy or sell a certain amount of units of a specific product at a specific price. You can also think about it as the intended supply and demand in the market. Why intended? Well, those orders can be pulled at any time if the market participants change their mind, as long as those orders haven't been traded through and executed yet. That means if all of a sudden a buyer or seller changes his mind and is not interested anymore in his buy or sell order, as long as that order hasn't been filled yet, there's always the option to pull that order. And an inventory heat map illustrates those big orders in the DOM filtered in a chart per price level. Now a good day trading platform allows you to adjust that filter accordingly so that your heat map chart doesn't either look like a Christmas tree if the filter value is too small, or like a black hole where you don't see any large orders if your filter value is too big. And a good rule of thumb for the filter value is around twice the size of the average orders sitting in the DOM, 10 to 12 prices above and below the currently traded price. In contrast to illustrating the limit orders on the heat map chart, there's another very useful chart type showing not the intended supply and demand in the market, but rather the actual traded volume on the bid and ask side. And that, ladies and gentlemen, is the footprint chart. The footprint chart monitors the actual order flow of your preferred product with regard to its market orders. And in general, for every unit of traded volume, you need one limit order sitting in the DOM or in the price ladder and thinking, come here price, come to me, plus one market order thinking, let me in, I don't care about the price, just let me in. And once that market order executes into that limit order, voila, there's a trade. So these market orders are illustrated on the footprint chart, and as you may have already guessed, they reveal a bit more of an aggressive and sometimes even more emotional market behavior compared to the limit orders. And I'd say both charts have their place, but combining the powerful information provided in both charts, revealing potential big market participation in line with your trade idea, is just Now a good day trading platform allows you to overlay those two charts into one, so you can pull that chart out to validate your expected supply and demand in the market with actual data confirming that supply and demand and give you more confidence for your trade idea. One final caveat. These tools are rather edge providing tools and are best used in line with areas where we have edge in the market as traders, and like trade ideas in general, in line with a predetermined trend. So forget what everybody else out there is telling you that this is the holy grail of trading. These tools can indeed be very dangerous when used incorrectly, and be careful trying to just pull those two charts out anywhere, no matter what the market structure is suggesting, since those two charts might drag you in and pull you into trades which are not really in your favor and where you don't have edge in the market. Another final aspect I want to mention is that these two charts are only possible to create where there is reliable volume data available, and that's why we maybe at Trader Dynamics are not really interested in, for example, Forex trading, and feel free to check out that video about that topic as well, where we even caution about being engaged in that type of environment, also due to some serious systemic concerns in the Forex environment. I hope you enjoyed the video. Don't forget to like and subscribe to our channel, since we are dropping new interesting content every week. I'll see you in the next video, and until then, happy trading.